All right. Back in business here once again, guys and gals. Hope y'all had a fantastic day out there, but it's time to get back to work. Tuesday evening, it's November the 17th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time, it's great to have you with me tonight, because my job tonight is to help us find the best trade setups for tomorrow. That's Wednesday's Hump Day trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, got the oil, and got the gold on our radar for tomorrow. Boy, lots of great setups we're tracking for Wednesday's trading session. Before we jump in and get our hands dirty on these charts, though, I just want to make sure to remind you, make sure, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on this video newsletter. Don't forget also, if you have any questions for me, drop those questions in the comment section below. I'll get them answered as soon as possible. And as always, if you tune in every evening, if you're like me and you rely on this video to get your mind right and get those charts right, if you enjoy this video as much as I enjoy making it, I really appreciate you guys hitting that thumbs up button for me and supporting this channel. So make sure you subscribe, that way you don't miss the nightly newsletter alerts. Drop those questions in the questions section below, the comment section below, and thumbs up if you guys enjoy the video content for tonight. But enough of the introduction. Time is ticking. Let's grab a look at the charts and let's get ready for Wednesday's trading session. Boy, where do I begin here? Lots to talk about here tonight on the charts, right? We got the gold, of course. Gold is a bull market right now into a flag, or maybe a range, right? Or maybe both. Maybe a bull flag, right, in a bull trading range. The bottom line is I'd like to be a buyer right now on the gold. Strong move down, though, for the bears. So I've got a couple key components. I'm looking for failures, looking for breakouts. I'm also watching for a possible reversal because, if you recall, we had that big move down from late last week, which still has not been retested yet. So looking for the long side right now on the gold. We'll be open-minded, though, to the short side. I'm going to give you guys all the details in tonight's video. Over in the middle here on the oil. Oil is through rollover now. We got the rollover out of the way on oil a few hours ago. The rollover was completed. And, of course, we are coiled up in a ball right now, right? Oil is, as you can see, a triangle, a trading range. Range-bound markets on oil tell us one thing, right? Buy low, sell high, focus on failures, right? We're fading breakouts. I'm looking to be buying low on oil tomorrow, selling high on oil tomorrow, and also, too, keeping an eye on possible breakouts. So we'll talk about failure patterns. We'll talk about breakout patterns to look for as we go into Wednesday. Don't forget, Wednesday is inventory day for oil, so we definitely want to make sure we're ready on that. And then, of course, last but not least here, over on the S&P. S&P rotating back and forth inside this range. We talked about the big short last night on the newsletter. Now here we are trying to rotate back up to retest those highs. I'm definitely bullish on the S&P right now, but I got one big problem, and that is we're back in the middle of this trading range. We'll talk about how to get long on the S&P, whether we go lower, whether we go higher, and we'll also talk about what constitutes a breakout of this trading range, because who knows, right? Tomorrow, of course, Wednesday morning, we may see some breakouts. So S&P is ready, crude oil is ready, gold is ready. Before we jump in, though, and put our hands together on these charts here, though, let's grab a look at the schedule here for tomorrow. Now, don't forget, this week is the third week of the month as we get closer to Friday's trading session. Friday, of course, is options expiration, also known as triple witching. Next month, in the month of December, we have quadruple witching, the third Friday of December. But the third Friday of November is called triple witching, right? It's a small detail, but a very important detail. Options are expiring on Friday, and typically what that means is it means the second half of Wednesday, along with Thursday and Friday, we start seeing an increase in volatility. So do expect to see an uptick in volatility towards the end of the session tomorrow, and it will really start to kick into gear as we get ready for Thursday into Friday's trading session. Now, as I mentioned in last night's newsletter, we did get the rollover today on the oil market. We were expecting to get rollover either today or tomorrow. We did get the rollover on the oil market. If I go back in and look at my market analyzer here on NinjaTrader, you'll notice that I've got a clear, greater volume now on the 121 than I have on the 1220. So I'm very thankful that they're giving me that rollover here right now rather than tomorrow morning. That way we can all prep the charts for that January 2021. I think for a lot of reasons we are excited for 2021, right? I think I'm probably not alone on that, right? I'm looking forward to goodbye to 2020, that's for sure. But all kidding aside, though, the January 2021 contract is now the active contract, or the front month, as they call it in the biz, right? That 121 contract with more volume. Now, don't forget here, we'll now be moving over to look for rollover on the E-minis, right? Like the S&P and the NASDAQ, and you'll have gold rolling over here next, right? Coming up in a few weeks as well. So we do have rollover coming later on in the month, early next month. I'll have to double check on that as far as when rollover will be. Probably going to be early next month here. Now, looking back at the big picture here, tomorrow, again, latter half of the day, we start seeing uptick in volatility. Some of the known unknowns we have going on right now, right? Things we're waiting on more updates, right? Vaccine updates continue to really shock these markets. We heard from Pfizer last week. We heard from Moderna in a very impressive, vaccine announcement on Monday, right? Or Sunday evening, into Monday. Will we hear from more? Will there be more vaccines that come out this week? This is something we're listening in closely for. And of course, unless you've been living under a rock, we know that there has not been any certification of the election results yet, right? People have speculated who wins, but until we see some certification for it, it does sound like that is going to be an ongoing saga. This may get drawn out here in the next couple weeks, even the next couple months here as we go into inauguration in January, right? I know January seems like a long time away, but that is something we're watching for right now. So more updates regarding vaccines, more updates regarding the election, OPEX, of course, as we get closer, to Friday, right? That's our big bird's eye view of the market. As we dive deeper into the news for tomorrow, we've got big news tomorrow morning. Housing starts number coming out at 8:30 Eastern time. And of course, the petroleum status report, the weekly inventory report for crude oil at 10:30 Eastern time. So we got two big news reports here for tomorrow morning. Housing starts and permits to lead us off at 8:30 Eastern time. And if you're an oil trader like we are, the EIA petroleum status report at 10:30 later on in the session. Now remember, that oil report, that inventory report now is a big deal, right? Remember, you got to be careful. I always give it a 15-minute buffer, right? So 10:15 before the oil report comes out, and then usually about 10:40, right? About 10 minutes after that number comes out. Once the dust settles, then we can get back after it and go looking for entry patterns, on the oil futures. So don't forget, not your average news report tomorrow at 10:30 Eastern time. 15-minute cutoff before, 10-minute buffer afterwards, and then we'll get back after it. So be aware of that, if you're trading oil tomorrow morning with us in the trade room. Housing starts, at 8:30. Inventories at 10:30. We want to make sure we're at our desks early tomorrow because of the big news on the schedule for tomorrow. And don't forget, every morning we open up our trade room 8 o'clock Eastern time. I would love to have you there with me, elbow to elbow, go into battle with me tomorrow morning in our trade room. We open up at 8 o'clock Eastern time. I'll put a link for you guys to join me every morning in the trade room. I'll put a link for you right down the description of this YouTube video. Grab that link, get registered, and come out and trade it with us tomorrow morning and every morning, Monday through Friday at the opening bell. If you're on the blog right now at sidewaysmarkets.com, I'll put a big button for you below this video, So grab that button, get registered, and don't miss a day in the trade room. Opening up tomorrow morning again at 8 o'clock Eastern time. Let's get back to the charts now. Got a good look at what's happening on the news schedule here this week. Will we hear another vaccine update this week, or will it be next week? That's something I'm wondering here as we go into OPEX here. I got the E-minis, I got the crude oil, and we get the gold on our radar here for today. Lots of different types of markets you can see here today. Let's jump first, though, into that E-mini S&P. And, of course, I'll kind of give you guys a bird's eye view of this, right, of this market right now, because it is a very important part of the process, right? We don't always need a bird's eye view, but this one we definitely do. What's the big takeaway? What's the key component on this S&P right now? The key component is it was a big bull market up, right, into a trading range, right? It's basically a bull market into a trading range right now. Range markets are balanced markets, right? The range itself acts as a magnet. In a range market, I want to find support levels to buy below the range. I want to find resistance levels to sell above the range. Simply put, a range-bound market is a balanced sideways market. Buy low at support, sell high at resistance. Again, buy low at support below the range, sell high at resistance above the range, and avoid trade setups inside the middle of that trading range. Now, one of my favorite tools for a trading range environment are these expanding triangles. We talked about this, of course, in great detail in last night's newsletter, right? We found ourselves up around the high of that triangle in last night's newsletter, right? And we were anticipating to see a rotation back down to those lows. Well, we definitely got that. They rotated all the way back down to those lows, and now we have to assume they're trying to make that rotation back up to retest those highs. So we call this range rotation in our video classes, in our trade room sessions every morning here at School of Trade. And that's ultimately what the big picture plan right now is, right? The buyers are trying to rally right off of this low and hopefully complete that mission up around those highs, right? That 36, 35, right around that pendulum swing. Speaking of which, you'll notice I have measured the amount of the move below the range, right? I've pinned it up at the high of the range. That combines now with that big high up there around 36, 37. That's a really easy target for those buyers. So that's the overall gist of what's going on the S&P. We are overall bullish, right? We do have this bullish tone here to the market. We've got the potential rotation or the goal of rotation back up to retest those highs. Now, let's dig in a little bit closer here. Remember, the goal of a range-bound market is to buy low at support below the range, sell high at resistance above the range, and avoid the middle, right? So no trade zone is there. Battle zone is the buy zone below. Right, battle zone above is the sell zone above. Now, let's get closer up on this. What else is going on right now? So we know what the market's trying to do right now. We know that not many people are going to want to trade inside the middle of that trading range, right? That's probably why it's getting kicked out of there right now. What's a smaller picture look at it? It's a spiking channel, right? Think of it this way. It's a bull market. Let's do it this way. It's a bull market into a spiking channel. Now, spiking channels are really important clues. You'll notice its price spikes up, right, and runs into that channel. Spiking channels are really important clues because they always tell us to look for buy setups off the base of that channel. Now, it looks like what's happened is we get a nice big bull spiking channel trying to complete that rotation. They got the pullback they needed, but you notice what's happening? The pullback put them, what it looks to be, too close to that trading range, right? You can see as they pulled back here, the only way for buyers to get in is to do it inside the range. So it's no doubt, it's no surprise, I should say, why we're seeing one of these big red candles here, right? Because nobody wants to trade inside of that range. So we know there's a spiking channel. We know that buyers really are gravitating towards buying this area here, and that's exactly where I would like to buy. I just don't want to buy inside of that trading range. So knowing that is the case right now, knowing kind of what these buyers are trying to accomplish. What are my key setups here for tomorrow? There are really three things that come to mind. One would be, I've got this really strong move down. If you're a client of mine, we call these grind breaks. It's a kind of a shallow move there, right, for the trap high out there. It's a technical term you'll learn in our video classes. So if you're familiar with how we draw channels, right, we call them micro channels. If you're familiar with that, we are expecting one more leg lower, and it kind of makes sense here because of the middle of that range. Long story short, I'd like to see us get underneath this 98.25 low. I'd like to see some bears come in, try to get short, right, on that next pullback and allow me to buy into their stop losses with what I call a failure pattern going back up into that trading range. And remember, the key here is I don't want to be trading inside of that trading range. Let's say, for example, the market was to run lower and then pop back up, right, really strong. If we had that type of pattern, what I will do is look for a trap entry, right? Because trap entries are the best way to get in when you're trying to avoid buying high, in this case, right, or selling low. In this case, I'm trying to avoid buying inside of that trading range. So again, trying to avoid the range, right? I'd like to get this thing to come over to just below that 98.25, get that moving average coming over, get those bears, right? Trying to get short. Again, I'm buying at support areas, right? Underneath the range, trying to make sure I wait for those bears to get stopped out. Once those bears get their stops getting hit, right, that's where I want to be getting in, right? Buying right into those stop losses with a seller failure pattern. Again, not necessarily the lower the better, right? But I want to make sure I'm getting in underneath, right, that trading range. Now, you might be wondering, right, what if the market keeps running lower though, right? What if we were to make a run lower? Can I still buy that now? I definitely can, but now I have to be more concerned with what? With momentum, right? Momentum is definitely going to be a problem here. So the best way to buy if we get a strong run lower here is to wait for what I call a nested failure, which is just simply let the sellers try twice, right? Let them try once, higher high, let them try twice. I like to always try to draw a trend line or look for a trap low on that second try, right? Either one of those will work. But the key is if we run lower, right, and we get down around these lows here, the momentum now will be very bearish, right? So in order for me to buy the low of this range, I still want to buy the low of the range, right? It's not a breakout of the range yet, but I do want to make sure, though, that I protect myself against that momentum, right? So again, it's a failure pattern here just below that low, right? Wait for those bears to get short off the moving average, buy into stops, or if they really take off the downside, let them try once, let them try twice, and then we'll go up, right, back up into that range too. And I should also mention too, right, that if we do get that strong run lower, if they do get this one, right, two, a lot of times after those bears try twice, right, we get that nice strong signal, right, coming off that trend line. A lot of times, or trap low, or really anything, really. I just want to see bears trying twice there, and I can buy off a trend line. I can buy into stop losses. There's a bunch of easy ways, right, to get into that trade. What the point I want to make though is if we do get that run higher though, look for a trap, right? What usually follows these nested failures when the market snaps back up. Remember, we don't want to trade inside the range. Look for that nested failure into what we call a trap setup, right? Trap patterns, of course, are one of my go-to patterns whenever I'm trying to avoid something, right? I'm trying to avoid buying inside the range, like in this case. Guys, and don't forget, we cover failure patterns, nested failures, and trap patterns throughout our free trading course here at School of Trade. If you haven't done so already, make sure you grab our free trading course. I'll put a little pop-up there in the upper right-hand corner for you. That way you can register for the free course, learn more about my favorite setups, my 3-step strategy, And as part of that free course, I'll send you hundreds of examples of how we apply our favorite setups to our favorite futures markets, right? So grab that free course link that popped up there, get registered. That way, the next time we work together in tomorrow night's newsletter, and I say failure into pullback, into trap, you'll know exactly what I'm talking about. And again, don't be afraid to come out and join me every morning, right? The free course may not be what you're looking for, but maybe you want a trade room. Come out and join us tomorrow morning in the trade room. I'll put all the links in the description of this YouTube video. So now we know how to buy it as the market goes lower. What if we go sideways here, right? If we get stuck going sideways here, the sideways part of it is kind of the easy part. If it goes sideways here, right, over the next couple hours, right, into the overnight, then we simply look for support levels below the range. We wait for price to make a run lower, right? Eventually the buyers will run out of bullets. We wait for sellers to come in and try to get short, right? When I was a rookie trader, I used to love breakout pullbacks. The problem is breakout pullbacks don't really work very well in range-bound markets, right? So breakout pullback, I'll wait for those bears to commit and we'll buy into those stop losses, right? Again, they're called failure patterns, and you'll see a lot of attention on those inside of our free trading classes, right? So grab the free course in the upper right-hand corner to learn that pattern. How about the price goes higher here, right? Now, as it goes higher here, there are two specific types of patterns I would be looking for. The biggest concern as the market runs higher is we don't want to chase after it. Right? We know where the market wants to go. Remember, as we go higher, buyers will take profit, sellers will enter the market. So the big concern here is as the market runs higher, we don't want to chase it, right? Keep that in mind. Now, one easy way to do this would be a 1, 2, 3 reversal, right? Or in this case, depending on how far it pulls back here, we've got this 1, 2, 3 already. That will be enough for me. If I could see a strong run up, right, for those buyers right now, I would love to draw a trend line off that high, find a new channel, right, a smaller channel, and buy the pullback off the low of that channel, right? We call these 1, 2, 3 breakouts. In this case, a 1, 2, 3 reversal pattern. Again, I don't want to buy the pullback right now because we're too close to the middle of that trading range. Stay away from the middle of the range. Wait for that momentum to shift going higher. And again, we got a good plan if the price pulls back, right? We're now looking for the plan if the market runs higher, right? So watch that new channel. Another pattern I'm watching for, let's just say, for example, the market just takes off to the upside. Maybe it goes down, comes back up, or it simply runs higher here. If we do see a strong run higher, I will then, again, remember the concern is I don't want to buy too high up here. So if the market really starts to run, we'll look for what we call a 2-try trap pattern. These are very simple patterns, but they've got a very specific set of rules. The first one is strong run up, shallow pullback, higher high in price, trap, right? Trap, 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 trap below that low. That will be another great breakaway pattern here. And again, we know where the market wants to go, right? It's trying to get up around that 36, 37 level. So I think we're covered pretty good now on the buy side. How do we get short on this market? The hardest part right now about getting short on the S&P is the fact that we've got this rotation going on. But, you know, a lot going on right now in this world we live in, so who knows, right? We may see some news overnight. What you want to remember is there's a lot of support down here. So if we see a strong move down, that does not necessarily mean this market is safe to be a seller, right? If we see a strong move lower here, again, as I mentioned earlier, I'm looking for a nested failure. 1 try for the bears, 2 try for the bears, draw that trend line over, look for that trap low, right? Either one of those, right, will work great on that for that nested failure. However, if we make that move lower, if the moving average comes over and the bears can hold that pullback and jump now, if I can get sellers really getting serious through those lows, now what I can do is I can mark this up as a 1, 2, 3 breakout pattern and look for a rotation now down to that 35.47. Now, there's a big range. If I zoom out here a little bit further, there's a big range down here. And so what happens quite often in the markets is we'll go up, we'll trade sideways up here, right? And then what if, hey, something happens, the markets get spooked, we then rotate back down and kind of get back into rhythm, right, in that range below. So 35.60, 35.50, that 35.47 level will be an easy magnet here. Again, if these bears can get that 1, strong move down, 2, pull back to the moving average, and 3, jump off the moving average through those lows. Once we get that, mark up that low, mark up that high, and we're selling short right off the high of that hidden channel. And remember, guys, that short, right, if you were to zoom in on that area right here, those are usually those combination setups, those failure into pullback combination patterns that we talk a lot about in the free course, right? So keep that in mind, right, as we look at that rollover buyer failure into bear pullback as we make that run going lower. And again, I'm going to be covering a lot more details on these patterns in our free trading class. And if anything else happens here, right, tomorrow morning, we'll get updated and we'll adjust our strategy, right? There may be some things that I missed here for tonight, but that will give us a good plan to get ready for tomorrow. And of course, tomorrow morning, we'll do it together at 8 o'clock Eastern time. Let's keep this party going though. S&P, I like what I see on the S&P. How about some oil? Now, like I mentioned earlier, oil has a rollover today. So we've got a little bit of a volume sharing going on, right? What happens during this time of the month, and it is every 1 month on the oil, right? Oil is 1 month, gold is 2 months, the E-minis and pretty much everything else, right, are every 3 months, right? Currencies, equity indexes, E-minis, right? And of course, the fixed income, the bonds, the notes, the bills, things like that, right? Those are 3 months. So oil's every 1 month. And you'll notice what's happening, right? They are basically splitting the volume between 2 contract months, right? So you're not getting that much volume on one side or the other, right? That's kind of what happens this time of the month. So knowing that is the case, it's a relatively low volume environment here, and that means I'm condensing my chart together to give us a little bit of a bird's eye view here, because as you can see, the market is completely sideways, right, and consolidated into a trading range. Now, what is a trading range? A range is a balanced market, right? The middle of the range acts like a magnet. So we go, right, what goes down will come up, right? What goes up will come back down. Now, what's the rule again in a range? I want to buy low at support. I want to sell high at resistance just outside the range. On a triangle, I really like to pay attention to the major swings, right? The major edges. That's what creates my sell zone overhead, right? This one right here, this 40.81 level, it's a little bit too close for comfort there, right? So I'll default out of that 40.33 and that 39.72 area, right? That is going to be a key spot, right, for, again, buy low at support below the range, sell high at resistance above the range, and avoid the middle of the range, right? The middle of the range is where good trades go to die. So when I see a range like this, I always think focus on the edges, right? Focus on the edges and focus on failures. In other words, as the market goes down, focus on failures to buy it back up. As it goes up, focus on failures to sell it back down. Now, you can probably see, just by kind of zooming out a little bit further on this, you can see there is an overall bullish bias to this market right now, right? A lot of that coming in the wake of these vaccine updates, right? Vaccines bringing hope, right, to a sense of normalcy here, coming here, hopefully very, very soon, as they threaten more lockdowns right now in the background right now. But staying on topic though, we get a bull market into a trading range. So obviously being a buyer underneath this range is going to be a little bit more reliable, quite a bit more reliable than being a seller above that range, right? I think that makes sense, right? I can be a lot more confident. I can be a lot more aggressive buying below that range because of the bias we have here. I also know if the market goes higher, It's not that I can't sell it. I have to be very careful getting short because momentum is just simply too bullish, right? So we'll talk about that as far as how to sell short on this mark tonight as well. And then let's not forget breakouts, right? Breakouts are a viable part of a range-bound market. Now, we've talked about breakouts a little bit so far tonight. I've got really two types of breakout patterns. For this particular chart that I'm seeing tonight, I'm going to really want to make sure we get those 1, 2, 3 breakout patterns, right? That means 1, 2, 3 break down, right? 1, 2, 3 break up. We're going to really want to see proof of this breakout. And hopefully we do get a breakout, right? Breakouts are exciting to trade. I just simply don't try to predict breakouts. I always wait for breakouts to trigger, right, with the right setup in the right location. All right. So how do we focus on failures right now? The key is I want to get down inside inside support levels below the range. I want to wait for those bears to come in, right? Try to get short off that, right? Off that moving average. Once those bears get short, we know exactly where their stops are, and we can buy right into those stop losses. Now, what I always look for is that run lower. I look for that seller to commit. Once I see those bears commit, now we know where stops are. And depending on how far the pullback goes, remember, we don't want to trade in the middle. I try to combine two setups, a failure into a pullback combination. Now, we don't always get that pullback in time, right? Sometimes what happens is the market will run up and then pull back right there, right? I'm going to take the pullback right there. I want to grab the pullback before we get back up right into that trading range. So as we go lower, seller failures, right, into bullish pullbacks for that rotation. And then don't forget, if we make this big move down like this, I can now measure the amount of the move below the middle, and I can project that on the opposite side, right? And that will give me a good target, right, on the other side, right? Remember, ranges are balanced. So when the market moves lower, right, it doesn't just go back to the middle, it will swing back in the opposite direction, right? So this momentum will shift, right? Trading that momentum swing as we go. So again, looking for seller failures into bullish pullback, right? Combinations off of that low, right? That's the bread and butter here, off of that low. Now, as we go higher here, can I sell the high? I can, right? Remember, at resistance. But what's the best way to get short when I'm concerned about momentum? Now, we talked about this on the S&P a few minutes ago, where the S&P was going lower and we had to use what I call a nested failure pattern. Remember that from earlier? That's the same thing you want to look for here. Again, get up into resistance overhead. Wait for now, right? Wait for now those buyers to come in. Let them try once. Lower low, let them try twice. Again, I always like to draw a trend line, right, and short off that trend line. Even better would be getting a trap, right, above that high. That's always a great setup as well. But the key is, and again, there's a little bit of nuance that goes into this. The key is you want to make sure you get those buyers trying once, buyers trying twice. Once those bulls, once they've committed twice now, right? Remember what we're doing is we're giving those buyers all the time they need, right? If you want to keep going higher, go higher. But just like we talked about last night, right? If the buyers, if they try once, if they try twice, they're probably going to give up, right, and go in the other direction. That's exactly what we saw from last night's newsletter, right? So what happened today, and it's likely we're going to see here tomorrow. Again, if those buyers can get up into resistance, buyers try once, buyers try twice, we know where stops are, right? And again, I can use a trend line overhead. I can sell off a trend line. I can sell to stop losses. There's a lot of different ways we can trigger the entry. And I talk about that stuff, right, in our free trading course, which of course is linked up right in the upper right-hand corner. So a nested failure pattern to get short off the high, right, of this oil. Okay, so now we know how to fade the breakouts, right? How to buy low, how to sell high. You know, one of the hardest parts will be if we sit here sideways tomorrow. If we sit sideways, what do? We sit on our hands. We wait for that price to run down, failure, into pullback, combination back up. We wait for the market, right, to run. Again, if we're going sideways here, go up, nested failure, and back down, we go from there, right? So same plan applies. Now, what's a breakout look like? Breakout, breakout, breakout. Now, first of all, you want to make sure you know where the major turning points are. Major high up at 43.33, major low then at 39.72. There are levels outside of this area, right? For example, if the buyers can crack through these highs, I get that 46.06 area. That is a juicy target. Seems to be too much to expect tomorrow, though, right? We're at 41.5 pretty much right now. That would be obviously a pretty big move, right? $3.50 move, not out of the not completely out of the realm of possibility, but it would require a small miracle, right? They'd have to figure out that coronavirus disappeared. You know what I mean? It would take a pretty big miracle there. And then of course 37.40. Right, 37.40 is the big low going lower here if the bears can take this thing lower here. So two types of breakout patterns, right? Two types of breakout patterns. On the upside, the easiest way to do it is as always, right? A 1, 2, 3 break higher here. Now you can already see we've already got this move up, this pull back. So if they can give us a pretty strong jump going higher here, I can gladly mark up that high, gladly mark up that low, and I can dig my heels in on that first test, right? The first test is always the best test as we try to go back up, right, to retest that high, right? So we'll keep an eye on that kind of breakout runaway market there. Keep in mind, too, if the market simply spikes higher here, we want to try to avoid buying into the overhead resistance here. What's the best entry pattern to avoid buying high? It's a trap, right? We call them two-try traps. Strong move up, shallow pullback, higher high in price, and a trap right below that low. Very, very simple pattern. Strong move up, shallow pullback, barely kisses the moving average, higher high in price. That sets a table, right, for a trap. Now, we may also see something like this where we run up, right? Price pulls back, and they blast through it again, right? Wonderful. That creates another 1, 2, 3 breakout pattern. Mark that high, mark that low, right? And again, we're buying off of that low. There's a lot of different ways this market could set up as it goes higher here. But as you can see, the big concern is as we go higher, I want to make sure I'm avoiding buying right into that 33. And I do want to make sure, though, that if we do go through it, I want to see it go through it on strength, right? Really get me a nice strong push right up through it after a pullback to the moving average there, right? So nice buy setups as we go. Now, how about the sell side? The sell side is a little more difficult because of the overall bull bias, right? A move down will definitely not be seen as a selling opportunity. They're going to have to hold that pullback and really see some strength running lower here, right? Now, keep in mind, right, this could easily go 1, 2, 3 break down, and we're not out of the woods yet. We're still in this support area down here, so be very careful with this. If we see that let's put it this way, if we see that 1, 2, 3 run like this, how would I buy this market? What's the concern I have? Momentum, right? So what is the best? Remember, it's a range. So what do you do with the range? You focus on failures. What's the best failure pattern? We know this by now, right? What's the failure pattern you want to use when you're worried about momentum, right? Remember it's right here again from last night's newsletter? It's called a nested. Let them try once. Let them try twice. Get a trap low. That'd be great, right? Trend line low. That'd be great. Again, let those bears try twice. We're buying into stop losses. We're buying off support trend lines to run this thing back higher, right? So remember, be careful about being a seller into those lows. Now, if they get, again, 1, 2, 3 down, that's great. But now hold that pullback, right? Show me you mean it. break through that low, now we're on. Now I can mark that low, mark that high, and now I can start getting more serious about being a seller. I just definitely don't want to get caught, right, getting short right into the low of that trading range. And again, we know exactly where this market, right, wants to go here, 37.40 and that 34.06 level, right, as we go back to those lows. But right now, we're a little bit too bullish to want to get short on this market right now. We'll see what tomorrow brings. We got inventories again at 10:30 Eastern time, right? So it should be a pretty eventful session for the Texas tea, the black gold. Speaking of gold, how about some yellow gold, some yellow metal, right? How about some gold here for tonight? Looking at gold to finish up tonight's video newsletter, what's the key takeaway right now? We are basically bullish into a trading range, right? Bull market into a range. And we talked briefly about this last night, right? There are kind of three basic patterns I look for when it comes to a bull market into a trading range. We've talked a lot about these already tonight, so I won't go too deep down the rabbit hole again. But we know that a range bound market is a balanced market, right? We know the range is going to be a magnet. My goal in a range market is what? I want to find support levels below the range, right? Buy at support levels below the range. I want to find resistance levels, right, above the range, and sell resistance here above the range, right? Buy low, sell high. Focus on what? Focus on failures. Now, there's an obvious bull bias to this one, so I definitely want to be a buyer more than I want to be a seller, right? So we'll buy low. And then I know my failure pattern, right? Failure patterns are my go-to patterns here, right, as we go lower. So looking for a seller failure pattern below the low of that trading range. And then what are the two breakout patterns to look for, right? What are the two breakout patterns? There were two breakout patterns we like to use. Let me get rid of the battle zone markers here, right? There are two breakout patterns, right? So if we go back into the range here, what are the two breakout patterns? The first one is called a 1, 2, 3 breakout, right? 1, 2, 3. Remember, the key here is 1, strong move up. 2, pull back to the moving average. 3rd is the strong jump off the moving average. That strong jump off the moving average, that's the key component. That qualifies the breakout. It's not enough to just get a strong move higher, right? Got to go 1, 2, 3 and jump off that moving average. That will confirm this magnet now has lost its magnetic force, right? When you see buyers buying that pullback, that tells you this magnet now is no longer in play, right? That's why it's so important they hold that pullback. If they don't hold the pullback, we'll keep going up, back in, going up, back in, right? So we're going to chase after it. If they do hold the pullback, mark up that high, mark up that low, and we're buying the low of that hidden channel, right? What was the second breakout pattern? The second breakout pattern's a really easy one. Remember, this one's got to be a strong leg, right? This one has to be a very strong push-up. Then, very simple rules, but very important rules, right? I want to see a shallow pullback, a higher high, and then look for that trap low, right? Remember that pattern from earlier on in the video, right? Strong move up, shallow pullback, higher high in price, trap low. So those are the three main main components when it comes to a bull market with a trading range. I want to see bears try to get short off the moving average. Right, I can buy at support below the range, or 1, 2, 3 break higher, mark the high, mark the low, buy that low, or it's that strong move up, shallow pullback, higher high, trap low, right, and that run up from there. All three of these patterns are very reliable, right, in these bull markets, right, into trading ranges. There's one more little nuance to this, though, that I want to make sure you're aware of, and that is this falling resistance trend line. Because sometimes what happens is we'll get the failure pattern, but the failure pattern will trigger, like we saw on the S&P, right? If the failure pattern triggers inside the range, what do you do with that situation, right? What's the best way to do this? As I mentioned earlier, I do not like trading inside the range, right? We saw an example of a failure pattern, basically a failed failure on the S&P, right, in the first chart that we saw tonight. If we do see something like that, what's the problem? What's the problem? What's the concern? The concern is we're buying too high. right? We're buying too close to the range. So what's the remedy, right? What's the medicine for that ailment? A trap, right? Trap patterns. See, that's why I'm always asking my clients, what's the concern here, right? What is the concern? The concern is buying high. The concern is selling low, right? Comparably speaking, relatively speaking, right? In this case, you're buying too high. If you're buying inside that range, that's where a trap comes in. That will also help me avoid buying into resistance as well. So definitely keep that, right? Definitely keep that on your radar here. And again, I wouldn't be upset at all if we see one of these guys, right? We get a seller failure, right? Into that literally 1, 2, and 3 run higher, right? We can grab the seller failure entry. We can grab the 1, 2, 3. Now, of course, I'm not going to buy that pullback in the middle, but if they can go through that high, though, now that momentum becomes really strong, and the first test is always the best test as this market rolls, right? As market rolls higher here, all right? So some really nice setups we're tracking for on the gold. Last but not least here, though, on the yellow metal. And remember, too, if we get stuck inside the middle, what do? We're still bullish. Wait for those 3 patterns, right? So if we sit inside the middle, right, don't forget, don't do anything crazy. Don't trade the breakouts, right? Fade the breakouts. Trade the 2 breakout patterns, right? Now, what if the market runs lower? Right? What if we run lower here? What if we run lower here right now? We get a strong move down already. Right? That's a relatively strong move down. Not that strong, but what if they hold that pullback and they jump off that moving average? What's that called? It's called a 1, 2, 3 breakout. It's also a 1, 2, 3 reversal. What do we do in that situation? We mark the low. Yep. We mark the high. And we look for that short, right, off the high of that new channel. And again, remember, right, think about in that area. If you were to zoom in on that area here, right, it's usually going to be a failure into pullback combination setup, right? And we'll talk more about that, obviously, tomorrow morning in the trade room, and we'll do it, of course, in the free trading classes as well, right? So make sure you grab that free course link so you get a deeper dive into that. Where's our objective for the bears? That's a pretty easy one, right? 1861.5. If they really get this party going to the downside, that big target down at 1848.1. Right? If the buyers get cooking, we got 1918.3. We'll see what tomorrow brings, though, if these buyers can really start, right, to push this thing higher here. So big day coming tomorrow. 8 o'clock Eastern time. I am excited to see you guys with me tomorrow morning, every morning in our trade room. It's very easy to get registered. I'll put all the important information. There'll be a button right below this video tonight on the blog, or I'll put the links you need in the description of this YouTube video. Don't be afraid to call the office if you have any questions. Don't be afraid to call that toll-free phone number. We got live chat on the left, live support on the right. Drop those questions in the comment section below. And I hope by now you've subscribed to our channel. Hit that thumbs up button for me. And again, keep in touch, right? Don't be a stranger. I would love to answer questions. So call the office if you have any questions, or grab that link below and get registered and come out and trade with us every morning at the opening bell. But that's it for me, guys. I've taken up too much of your valuable time. Hope you have a fantastic rest of your evening. Stay safe out there. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.